And mate, houses versus units, we get asked this a lot at the moment, and we're very generally probably preference over houses for us at Sound Property, looking at a long-term growth objectives. But we probably will see in the next couple of years units playing a bit of catch-up just with all the immigration that's coming in. I think they will migrate towards the apartment market initially, but then obviously they'll put pressure on that future housing supply, which we've talked about in previous episodes. But for us at Sound Property, we're always about that long-term growth. It's not about a year or two trend for us. We don't kind of chase fads like that. So it's really interesting to look at the long-term results of houses versus units. And you had one recently in Rushcutters Bay. Was it a client?
So I was comparing two different markets essentially. That they basically wanted me to inspect a property in Rushcutters Bay. I actually looked into two different markets at the long-term growth over the last 25 years. It was actually really interesting. Rushcutters Bay, that apartment was achieving 5.6% long-term growth averages. Whereas the markets that we would look with that price would be around over 7.5%. So long term, that there's a massive difference.
So we might be able to put that on the screen to have a look at that comparison chart between buying something with a long term growth of 5% versus something at 7.5%. It can be literally hundreds of thousands of dollars of difference. And I think people initially just gravitate towards units because it's feels comfortable. It might be in the suburb that they live and it's what they can afford and all that kind of thing. But when you actually look at the long-term performance of units versus houses in this country over the last 30 years, houses have always outperformed units, and that will continue, especially with this immigration and the long-term pressure that will put on housing supply.